Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P, the QQQs, and most of your other major sectors had a very good day. But we know that a lot of the emphasis today was not on the intraday action. It was everything that was going to happen after the close, namely because of the NVIDIA earnings. As you can see right now, the SPY in the after hours down about 0.31 and the Qs down about 0.50. A lot of your big tech names, including NVIDIA, lower. NVIDIA specifically down about 3%, which raises the question, is the growth story for NVIDIA over? Was the earnings just an overreaction? Very valid questions. And in today's video, of course, we are going to answer all of them. So what we have on the table today is number one, we are going to go through two earnings reports that I have prepared for you guys. Number one, of course, is going to be the big boy, NVIDIA. And thereafter, we will take a look at CrowdStrike earnings. They are also slightly down in the after hours, but they posted some pretty good numbers. After we take care of those two companies, we will take a look at our major technical analysis portion of the video, starting with our major indexes, the SPY, the QQQ, and other major indexes as well. You guys know that we have a few things to look out for tomorrow and Friday, not in terms of earnings so much, but no, this time in terms of macroeconomic data. Tomorrow, we're getting the GDP, and then on Friday, we get the preferred inflation gauge of the Federal Reserve, which is going to be your PCE inflation data. So those numbers are coming out tomorrow, so we will have a look at what happens if the markets end up red into tomorrow, go even more red after GDP and into Friday. What are the key levels that we have to look out for here on the SPY, the QQQ, and other major indexes? Thereafter, we will take a look at our big tech names and do the same. Now that we can see that some of the big tech names are red in the after hours, are there going to be some opportunities to play these names tomorrow on any weakness? So we'll do a full list rundown here in terms of the technicals. And then lastly, of course, we will take a look at our biggest gainers and losers of the day in regular hours. We got a lot of names red, a lot of the fan favorite, retail favorite growth names here towards the downside. So we'll have a look at some of the levels that we might be interested in playing in the event that this slide does continue into tomorrow and Friday as well. And then we'll also take a look at some of the names that were very green on the day and derive whether or not these are still good buying opportunities too. So it should be a very fun and interesting video, guys. Let us jump right into the action right away, shall we? Moving into the SPY, up 0.23, the Qs up 0.15 on the day. Here's a look at your heat map from the day. So as you can see, the heat map is fairly good. There were much more names that were green than red on the day, but all things considered, a bit of a flat day leading into the NVIDIA earnings, of course. Big tech was somewhat mixed on the day. Microsoft, your best performer. Some names down, some names up. Not too bad there. In terms of financials had a pretty decent day. Berkshire putting in another good day. Some of the credit card companies down, but the bank's doing well. Healthcare, another mixed day, but still the sector remains undervalued. And the bottom half of the market also, a lot of mixed reactions here across the board, but Walmart and Costco coming up a little bit after they've been on a 5-6 day in a row decline. If you take a look at your one-day relative performance here, you can see that even better to where the market was very mixed and there wasn't too many big red sectors, nor were there many big green sectors. To the upside, we had energy, real estate, technology, and consumer defensives, and to the downside, communication services, cyclicals, and basic materials. On your 1 week relative, guys, you still remain fairly healthy overall, which with many more sectors green than red. The only one still in the red, consumer defensives and utilities, everything else pretty much moving higher. Technology kind of right here in the middle, but we will see how the week ends, of course, because we have a bit of weakness after NVIDIA earnings. So we will see how the market deals with that tomorrow. Now, let us jump into the earnings before we do more technical analysis. And of course, we have to start it off with NVIDIA. So the main question, because NVIDIA right now is down 3%, did they have bad earnings? Is the story over? Not even close, guys. They had very, very good numbers, and I still remain extremely bullish on this company. So just putting that out there before we dive into the numbers, and I will show you how bullish this company actually is into the next 1, 2, 3, 5 years. Taking a look at their earnings real quick, they beat on EPS by 4.12% and beat on revenue by 1.51%. Some of the beats, however, apparently were just not good enough for Wall Street. However, you know that Wall Street focuses on short-term things such as this quarter and only next quarter. However, what Jensen Huang said on the call was extremely bullish for the future of this company. The amount of different sales verticals that they are attacking is quite staggering. Taking a look at the easy numbers, revenue was up 56% year over year. Fantastic print. The AI data center revenue was up 56% as well. Now, these are slowed down growth rates in relation to Q1 because the law of large numbers is catching up to them, of course. If you take a look right here, their Q1 numbers showed 69% revenue year over year and 73% data center revenue year over year as well. So the company is slowing down slightly. However, the guidance for next quarter is still over 50% year over year, and into next calendar year as well, it will be 50% year over year. So they're slowing down from very high numbers, but even the numbers they're slowing down to are still staggering, guys. Operating income up 51% year over year. You can see the operating margins are now a little bit higher. I'll remind you, this one-time event last quarter was because they had to write off $5 billion in sales towards China because they were unable to export their H20 chips. Earnings per share up a very healthy 54% year over year. The numbers were fantastic. Some more easy numbers for you guys. You can see the sheer amount of beats on this page right here. One of the reasons that people were slightly disappointed was because they slightly missed data center revenue. The expectation was 41.3 billion. You can see here it came in at 41.1 billion. So a tiny little miss, but even for a company like this that is arguably, priced not quite to perfection, but almost, that is enough to drop the company 3% in the after hours right now. The expected move, I'll remind you, was 5.5. So a bit of an underwhelming move for NVIDIA, but still very, very strong numbers here, guys. Take a look at your gross profit margins where my mouse is. Over the past couple quarters, guys, still above 70%, 72.7% at this current time being, and EBITDA margins as well of 64.5%. Fantastic. Your net income margins stand at 55.2%. Those are insane net income margins. It allows them to generate a ton of free cash flow. This quarter, the free cash flow was a little bit lower because they chose to reinvest a lot of that money into further capital expenditures. Very normal. Jensen talked about that on the earnings call, and they ended the quarter with $56.8 billion in cash and cash equivalents and only $8.5 billion in debt overall. If we take a look at several different lines of business, because we know NVIDIA has many, although people focus only on the data center portion of the business, right? Look at the data center revenue here, above $41 billion. Clear increase and ramp over the last 8 quarters. Now, of course, the ramp is slowing down. However, the numbers are still absolutely ridiculous, in my humble opinion. A highlight of this business this quarter was gaming. Gaming performed really, really well over the course of this most recent quarter, $4.3 billion. We know that gaming was a bit of a pain point for them last calendar year. It just wasn't expanding that well, but you can clearly see here, over the course of the past 3 quarters now, we are now back to the upside, looking very good as NVIDIA has integrated its new Blackwell technology into the consumer GPUs as well. Your professional visualization segment of the market was also up, but a small portion of the business for NVIDIA. Auto segment, where they have their NVIDIA Drive, is also up to 586 million, and the OEM and other up to 173. So very solid numbers overall. Fantastic print on the revenue for NVIDIA. Let's take a look at the article real quick. NVIDIA beats on top and bottom lines as the data center revenue surges 56%. Let's move into it. The sales growth this quarter will remain above 50%, signaling to Wall Street that demand for AI infrastructure shows no signs of fading. NVIDIA said it expects revenue this quarter to be $54 billion, plus or minus 2%. The expectation was 53.1. Keep in mind, this guidance does not encompass any guidance for sales of H20 chips into China. Had they been able to ship these chips to China this quarter, they would have been an extra $8 billion, an absolute massive amount, right? So moving on further here, the company expects between 3 and 4 trillion in AI infrastructure spending by the end of the decade. I will remind you that NVIDIA has a current market share of 75%. This is the estimate the company is giving by the end of the decade, by 2033, to $4 trillion in AI infrastructure spend. If they hold on to that market share or very close, it just gives you an idea of how much money this company will actually make from this AI ramp over the course of the next 5 years. It's going to be absolutely massive, which is why you might see the stock down 3% in the after hours today, but I'm still extremely bullish on the next 2, 3, 4, 5 years for this company overall. And we'll get into more reasons a bit later. Now, moving on further here, year-over-year revenue has now exceeded 50% for 9 straight quarters, dating back to mid-2023, when the generative AI boom started to show up in NVIDIA's results. However, the second quarter marked NVIDIA's slowest period of growth during that stretch. Talking about the law of large numbers, they can't grow at 100% year over year every single year. They're coming down, but where are they coming down to? Still very healthy growth rates. Now, they could have added $8 billion in second quarter sales if it had been commercially available during the period, talking about the H20 exports towards China. NVIDIA said it sold no H20 chips to China during the quarter, but benefited from the release of $180 million worth of H20 inventory to a customer outside of China. Guys, the H20 chips are like a watered down version of chips, and somebody else still was willing to take them. And Jensen Huang talked about this on the earnings call. He literally said everything is sold out. The H100s, the H200s, and now people have to rent capacity from companies like CoreWeave, companies like NBIS, companies like IREN, and other companies of that nature too. But everything is sold out. And that's another piece of the evidence right here. Somebody is willing to take, because they couldn't get their hands on the best ones, they were willing to spend $180 million on H20 chips, which are a watered down version of what NVIDIA offered. So keep that in mind. The CFO, Colette Kress, said that NVIDIA could ship between 2 and 5 billion in H20 revenue during the quarter if the geopolitical environment permits. That was her guidance. However, the formal guidance does not encompass any of this revenue. So they sandbagged it a little bit, but Colette said pretty much if everything goes well, you could see 2 to 5 billion in the quarter, which would raise your guidance from around 54 to possibly up to 56 to around 59 billion, something of that nature, which would be fantastic. And moving on further, the large cloud providers make up about half of NVIDIA's data center business, the company said in the previous quarter. That's massive. NVIDIA said that Blackwell sales rose 17% from the first quarter. Very strong numbers. NVIDIA's gaming division sales were up 49% from the year ago period. That's what we were talking about, guys. The gaming division really doing leaps and bounds for the company, starting to participate now, whereas before it was lagging behind. NVIDIA said that during the quarter that its GPUs intended for gaming would be tuned to run certain OpenAI models on personal computers. Very interesting as well. The company's robotics division, which management has highlighted as a growth opportunity, remains a small part of NVIDIA's business, with $586 million in sales during the quarter. This was this segment right here, the auto segment right there. Right, so automation, representing 69% growth on an annual basis. Very strong. $60 billion in share repurchases as well. This was a big highlight, but keep in mind, NVIDIA is a $4.4 trillion company. So 60 divided by your 4.4 trillion is not that much. It's about 1.36% of the float, but that's pretty good. During this current quarter, they bought back $9.7 billion overall in shares. So pretty good, guys. Some more highlights from the NVIDIA earnings slides here. They revealed that NVIDIA is working with European unions, including France, Germany, Italy, Spain, and the UK, as well as technology industry leaders to build out the NVIDIA Blackwell AI infrastructure. They did not mention the big contracts that they got from the Middle East as well, from Saudi Arabia and countries in that whole environment. Looking very strong right there, collaborating with partners globally to build and accelerate advanced AI supercomputers, including several companies from the US, some from Germany, the UK, and Japan as well. Announced collaborations with Novo Nordisk and DCAI to advance drug discovery. This is going to be huge, not only for NVIDIA, but a lot of the medical companies out there too, guys. This could revolutionize the medical industry as we know it today. And now gaming and AI PCs, the second quarter gaming revenue, as we said, was up 14% from the previous quarter and 49% from a year ago. Very strong, guys. Automotive and robotics, as we said, 69% from a year ago. Tons of very cool highlights overall. But one of the best things that Jensen Huang said on the earnings call, guys, is the following, right? He's hinted at Rubin, which is going to be the one that's coming after Blackwell, highlighting the fact that you might have to require millions of GPUs per data center and not only hundreds of thousands like you have today. That is absolutely ridiculous scale, guys. That's why they're talking about the $3 to $4 trillion opportunity. The evolution of the AI models is the reason why you will need much more GPU capacity, because it's the evolution from single response chatbots to inference models where you have reasoning, right? So you guys know what that means. If you guys don't know what that means, let me show you an example of exactly what that means. When you go on your Gemini model or ChatGPT, you can ask it two different things. You can ask it for a very fast response where it doesn't really think too much. It just pulls data from the internet. Or you can ask it for the expert response, the thinks hard, as Grok calls it, where it'll spend 2 to 5 minutes, reasoning not only against other sources, but reasoning against itself to give you a more comprehensive answer. Obviously, the second one requires a lot more compute power, and this advancement is what's called inference, essentially, right? Or reasoning, and that requires a lot more compute, and as a result, many more GPUs overall. So overall, guys, if I had to sum this one up, very solid. Maybe not what Wall Street wanted to see for this quarter. You have a tiny little miss in data center revenue, but the future is very clear for NVIDIA. 75% of the entire market share is currently under their belt. I would not expect that to change very much in the near or midterm future. Of course, we have some other players such as AVGO with their ASIC models, which don't serve the same purpose. And you also have competition from AMD. But even if NVIDIA loses a tiny little bit of market share to competitors, I still expect them to take the lion's share of the market overall. And as a result, if the data center opportunity would be 3 to 4 trillion by 2030, you can extrapolate even at 50% market cap how much money NVIDIA will actually be able to collect over the next 4 or 5 years. They're the biggest company in the world. This is exactly why, and I do expect them to remain the biggest company in the world moving on to the future. Now, at $176 in the after hours, the question that everybody must be asking themselves is this company a buy? Well, let's take a look at some of the fundamentals here. At $175, they're currently trading at a 39.3 forward price to earnings, a 1.71 PEG, a 1.62% free cash flow yield, and a 21.7 price to sales. But sales will be expanding quite well indeed. Now, of course, we know that there is a current growth slowdown in NVIDIA. However, the objective numbers in absolute form are still very good. No longer will you have the 100% year-over-year growth rates, but 50% at least, pretty much cemented all the way through 2026 is very good. But end of 2026 into 2027, you may see a slowdown in the EPS ramp. You may see a slowdown in the revenue ramp as well. However, the path in terms of the next 5 years for NVIDIA is very clear. If you were to total all of these revenue streams for the next 4 years, there is already almost $1 trillion right there on the table for NVIDIA to go and get. Now, keep in mind, beyond 2028 into 2029, 2030, they will also be collecting probably close to $400 billion a year. And as a result, as we need more and more compute capacity, and there's just not enough, NVIDIA is going to be the top dog overall. In terms of the valuation, guys, as of right now, is it cheap? No. But is it also expensive? No. This company for me remains a nibble if we have been invested prior. I know a lot of you guys are able to pick up some shares where we were going shopping for them in the markets during either last year, 2024, or during the tariff sell-off. This company is a hold and maybe even a nibble at these levels. Starting a new position right here has to be done with a 5+ year time horizon to really get the best out of the projected compound annual growth rates for the company. So overall, guys, not a bad buy, and any dips indeed for NVIDIA would also be for buying. If you come down here to the support level, 171 down to 166, decent little reload area for some longs and selling some put options under the market. Not the worst opportunity at all. The long-term guidance for NVIDIA is very clear, in my humble opinion. This is still one of the best companies in the world, despite the fact that earnings right now may not be well received by Wall Street. This is what we were talking about, right? Sometimes what the company is doing versus what the stock price is doing are two different things. Sometimes they get disconnected, and I do believe that this is indeed one of those times. Fantastic numbers from NVIDIA, fantastic guidance, fantastic growth prospects for the next 3 to 5 years. As a result, I would still be holding pretty much every single one of my shares and maybe even adding to the position a little bit. Hopefully you guys enjoyed that recap on NVIDIA earnings. That's company number 1. Now, company number 2 is going to be CrowdStrike. So switching gears a little bit, we're going to take a look at this leading player in the cybersecurity niche. So CrowdStrike coming out with their earnings after the bell. The company is currently down 3.25% in the after hours. Is that because they had bad earnings? No, kind of like NVIDIA. They actually had really good earnings. However, this company has always been a little bit expensive. So it's pretty much obvious that in the event that they miss even slightly on certain components, the market may just not react very well to it. And that's exactly what happened today as well. Taking a look at their EPS, beat by 12%, very solid, beat by 1.65. So where's the mishap? Well, the mishap, as per usual, sometimes with these companies, comes in terms of the forward guidance. Let's have a look, shall we? So in terms of your easy numbers right here, you can see revenue was up 21% year over year. The net new ARR for the quarter is $221 million new dollars. Very strong. We'll take a look at more ARR numbers in a little bit. This is average annual recurring revenue, of course. Their operating margins now curling back higher into the low 20% range, which is very good. Operating income up 12% year over year. And also your EPS is up a very healthy 6% year over year. More easy numbers in terms of how many things they beat. You can see that they beat most of all the revenue estimates, the ARR estimates, and even your EBIT and free cash flow estimates too. They raised the full year revenue guidance. However, the Wall Street was expecting them to raise by more. So they missed, they raised guidance, but they missed the already high bar that Wall Street had set. Other than that, they really beat across the board on everything. You can see here the revenue and ARR additions are over 20% each, which is very, very, very strong. Free cash flow, 24.3% in terms of growth, and net income currently standing at 20.3%. This is really good. I'll remind you guys, in terms of net income, CrowdStrike was not always a company that had phenomenal net income. Matter of fact, a few years ago, this company had negative net income and has been somewhat inconsistent in that aspect, right? But if you take a look at their non-GAAP net income right now, it is significantly higher, which does look good in terms of your future outputs, right? Because this company is obviously scaling and scaling and scaling and scaling. These cybersecurity companies all have one thing in common, right? They have very high gross margins because they're software companies. You would expect that. The cost of goods sold is not very high. However, in terms of them turning these gross margins into operating and net is not the most obvious thing. They have a lot of research and development to promote their products. They run a lot of sales and marketing campaigns as well. They do a decent amount of stock-based compensation too. So all of those considerations lead to operating and net margins, which are a little bit lumpy. So this is the direction that a lot of these cybersecurity companies are taking right now. Some of them are profitable. Some of them are still on the verge of profitability, and CrowdStrike is one of those that's just on the verge of profitability. If we take a look at some of their second quarter highlights here from management, here's what they had to say. With reacceleration a quarter ahead of our expectations, CrowdStrike delivered an exceptional Q2. Record Q2 net new ARR of $221 million, over 1,000 Flex customers, and more than 100 reflexes highlight CrowdStrike's as the leader in cybersecurity consolidation, them and Palo Alto Networks. It's a very tight race. As AI transforms the enterprise, CrowdStrike enables organizations to confidently embrace their AI future from development to deployment, from cloud to endpoint, and from human to agent. Moving on further, we exceeded our expectations across all guided metrics in the second quarter. You could probably see that by this sheet right here where they absolutely crushed everything. Thereafter, delivering 21% year-over-year total revenue growth, record Q2 cash flow from operations, and record Q2 free cash flow of $284 million. Our strong execution and business momentum further bolsters our conviction in continued net new ARR acceleration for the back half of fiscal year 2026. If you guys want to see what that acceleration looks like in terms of their revenue, take a look at the revenue, guys. The blue column right here is just your subscription revenue. So working its way higher, never really missing in terms of accelerating quarter over quarter over quarter. Every one of these bars represents one quarter. And the tiny little orange portion down here, that is your professional services revenue. It does not contribute that much, but still it is there. Now, if you want to see how much money does CrowdStrike still have in the pipeline, because their services are very much in demand, take a look at your remaining performance obligations, guys, currently standing at $7.2 billion, which is just over a year and a half of revenue in the pipeline for CrowdStrike. They just cannot keep up with their pipeline. They just cannot do it fast enough, which is always a good problem to have. This is why this company trades at relatively rich multiples, because it is guaranteeing its growth into the future. And as a result, until the time that that slows down, it does benefit from a higher multiple. If you would see a slowdown on this, the valuation would probably get crushed, but there has been no indication of this. Every single year, guys, they add phenomenal amounts to this number right there. Now, moving on further into your CrowdStrike earnings slides, I'll just remind you what they're going for right now. They have a $116 billion total calendar year 2025 TAM in terms of total addressable market for all the different lines of business that they do. Keep in mind, there is a lot of competition in the industry, but them and Palo Alto Networks kind of stand on top of it all. By 2029, the expected total addressable market is supposedly going to more than double, and that goes in line with what we were hearing from NVIDIA earnings previously. more things kept on the cloud, more compute power required, more cybersecurity required as well. And CrowdStrike is indeed one of my favorite companies that takes care of pretty much all of the various things that you may need in terms of cybersecurity. As you can see, some companies do individually certain things very well. CrowdStrike operates in all of these segments and kind of packages them together. So if you take a look at their packages right here, you'll see that 48% of their customers are currently with 6 modules. In terms of the modules, guys, you can either view this chart right here, or there's another one right here, which is the 6 models. I know it's kind of tough to see, but they're kind of listed here. You got, identity protection, cloud security, data protection, all that stuff, right? So those are their modules, 8 different modules. So out of those modules, when a client takes one, does he take more? Yeah, 48% of their customers have 6, 33% have 7, and 23 have 8 plus, right? Which is pretty much the full suite from CrowdStrike. More and more, CrowdStrike is trying to push their customers to have more and more modules. Obviously, it represents better and better annual recurring revenue for them. Now, their ending ARR for the year prior is pretty much an addition of 1.56 billion. That gives them a total ending ARR of about 4.657, as you can see right here. Here's the net new ARR, but the ARR is really solid, guys, really solid, as we saw, right, growing over 20% year over year. That is a very good number. Subscription and total revenue up higher as well. This is one of their best free cash flow quarters ever at $284 million, which is also very strong. They highlighted their customers, more customers taking more and more modules as well. So the sales team is doing a pretty good job of that. And as we see, right, the ARR is coming from many different segments, whether that's cloud security, next-gen identity, and log scale next-gen SIEM, which are some of their best growth segments overall. If I had to summarize this earnings report, guys, I would say that it's very solid. They increased their guidance. If you look here, this is their full year guidance. They increased it across the board, namely in terms of your EPS. EPS and revenue guidance were both very, very, very strong. But as I highlighted a few short slides ago, right? They slightly missed a raised bar guidance, but they did raise the bar on revenue. They raised the bar on EPS, which is exactly what you want to see from a company like this as well, right? So the company is still doing very, very, very well. Subscription gross margin is still very high. However, as I said, right, they spend a lot of money. S&M is sales and marketing. 28 to 33%. R&D is another big spending category for them. This they need. Eventually, sales and marketing will probably be tapered back as they grow into their scale and more people know about their products, right? It's a very competitive landscape right now. So the sales and marketing team has to do a really good job of presenting the products. Not only are they competing with, Palo Alto Networks, which is their largest competitor, they're competing with all of these different companies individually. I do think that over time, over the next 3 to 5 years, you will start to see some industry consolidation, meaning that the biggest players will start acquiring some of the smaller players. We're already seeing Palo Alto Networks doing that by acquiring CyberArk for like $20 billion. I mean, just 30 days ago, you're seeing Google acquire companies like Wiz, essentially, the Israeli company, for almost $30 billion. And I do believe that a lot of these smaller companies will kind of just get absorbed into larger ecosystems. And as a result, you want to be one of these large ecosystem players to generate free cash flow, generate good returns for shareholders so that you can then acquire various companies and really consolidate your foothold as one of the stronger companies in the business. Now, that being said, the question that everybody must be asking themselves is, at $400 roughly, into beautiful support, by the way. This is prior all-time highs from July, resistance area again, below the 200-day EMA, and a sell-off from the top right now of 23%, almost 20 to 23%, right? Is CrowdStrike right now a good buy? Also right around this 200-day EMA. And we know if we're buying at or slightly under the 200-day EMA, usually in the context of a bull market, at least, I mean, this is the big mishap, of course, last year, where they had the mishap with the Microsoft operating systems and they fell off a cliff. We know, though, in the context of a bull market, usually it's a pretty good opportunity. Is it still? Well, the valuation, you're going to have to kind of, learn to appreciate that all these cybersecurity companies do trade rich at $390 where they were. Initially, this company was down in the after hours 7%, right? Now they've kind of retraced those gains. So I did the valuation at $390. It's not going to be that much higher at $406, guys. let's just use these for now. They're trading at a 106 forward price to earnings multiple, but keep in mind, through 2027, they're growing revenue by 21% per year on average, 25% EPS growth per year on average. As a result, that gives them a 4.26 peg. Still expensive. There's no other way to see it, right? It's still expensive. And forward price to sales, also 22. As I said, the reason that Wall Street agrees to give them that is because they keep showing about a year and a half worth of sales in the pipeline. They keep adding to their annual recurring revenue numbers. And eventually, when they focus more on profitability and focus more on driving money to the bottom line and focus more on expansion of this EPS, this price to earnings ratio and the PEG should contract without the stock price having to contract too much. So you are buying a decent amount of future growth with this one, although it is not very cheap by any metrics, assuming that you have to wait for CrowdStrike to come all the way back here to $200 to $150 before you buy. Probably is not going to happen, right, guys? So I would not be opposed to adding some CrowdStrike shares here or even starting a position overall. Right, this company is currently trading for about 105 billion. If them and Palo Alto Networks are going to be two of the largest players in the game, possibly that they will acquire other players as well and become even more dominant, I would not be surprised over the next 5 to 7 years to be able to see this company's market cap either double or 2.5x. So the growth prospects are looking very good. The valuation is expensive right now. It always has been expensive. The whole industry trades in an expensive fashion, and for the reasons that we explained right before that, but also for this reason right here, which unfortunately I just closed the page from, for the reason, guys, that the TAM, right, the total addressable market is rising so fast, and I would not expect that to stop, at least for a good portion of the next 5 to 7 years type of thing. So CrowdStrike, I don't mind it too much. This is exactly the area that I've been looking to buy a little bit of CrowdStrike shares in. So you may just see some shares of CrowdStrike in my portfolio soon. And that wraps up both earnings presentations for today. Hopefully you enjoyed NVIDIA. Hopefully you enjoyed CrowdStrike. Now let's dive into the indexes, shall we? So in terms of the SPY currently pretty much down in the after hours, exactly how much it gained today. So it raises the question, who is currently in control? Well, it is still the bulls, guys. You always have to keep an eye on the line in the sand level that I've been talking about for the last few days, which is the lows of last Wednesday and 634. In the event that GDP is awkward tomorrow and that PCE is also awkward, I don't believe that these two things are going to prevent a rate cut. That is pretty much penciled in right now for the Fed, 90% probability. So as a result, in the event that we do flush without making new highs, that indeed would be a new daily downtrend, and you would be watching out for a bit of healthy weekly consolidation. The weekly higher lows are all the way down here at about 620. That would not look so awkward. We know, as we've been talking about, there is seasonality to be dealing with currently. So we wouldn't be surprised if the markets are a little bit choppy. But as of right now, we've gotten all of the major earnings out of the way. Other than, in the next 2 days with GDP and inflation numbers, the next big report that you will keep an eye on is for next Friday, non-farm payrolls. That's going to be a very big one. President Trump talked yesterday about the fact that everybody would be surprised by the jobs report that was about to be put out because of the employment gains that have been had in the private sector. So we will have a look. Maybe he was hinting at the jobs report. I don't know what you can read from that, but take that as you will. Moving on to the QQQs right now. QQQs is the exact same concept. So the line in the sand remains 559. The daily bulls are looking for the continuation of the expansion. In the event that you roll over below this low right there, that would be a daily downtrend. That would also be a weekly downswing, and the higher lows on the weekly 552. In the event that you flush that and go for a bit more, you guys know we've been talking about this for a few weeks right now. Do not be surprised. Just be prepared. Be ready with your shopping list. 539 down to 505 pretty much, or 539 down to about 510, excuse me, is going to be this little pocket, prior resistance, current support. That would not look so awkward. And I do believe the markets are poised for a very nice Q4 into possibly 2 rate cuts, one in September and one towards the end of the year. Those are 2 things that the market will probably be looking forward to. In terms of the AI story, guys, is it over? Not even close. I don't even think it's close to being over whatsoever. So I'm still very bullish on infrastructure plays. NVIDIA, AMD, Micron, things of that nature. Still very bullish on some of the energy plays, as we don't even have close to the amount of energy required to power all of these systems. And some of the networking components, stocks like ANET and other things of that nature too. So the entire AI trade, guys, is, as other analysts have said, I know it appears like it's hyperbole when they say this, it is still somewhat the early innings, guys. We haven't even seen, I mean, you could talk about companies like Anthropic and things of that nature, right? You know, but you haven't really seen the companies that could possibly come from this AI boom. A lot of them are still very small private companies. So there's that whole segment of the market that is still, you know, to be had in the future, right? So very optimistic about the future, the next 2, 3, 4, 5 years about AI. So if you're sick of hearing about the AI narrative, guys, you better get used to it because it's probably here to stay. Moving on to XLF financials. XLF, not doing too bad at all. Daily uptrend is still very clear towards the bulls right now, looking very good. Any pullback looking for a new daily higher low. The higher lows are still down here. 52.32 would just be looking for a new one on any pullback. We have now cleared our prior all-time high resistance range. In the event we get a pullback, I think it's going to be a very healthy pullback. The weekly bulls are looking great. Pulling out of this prior resistance area, which is current support, 52 down to 50. So any back tests could be a nice opportunity to pick up some of your favorite companies that are currently breaking out right now. Talking about Berkshire, the good old breakout, retest, and possibly reset of the weekly uptrend. I don't know. Look at the weekly MACD. You tell me. After 3 months of downside and a nice engulfing move on the weekly, could we get follow through? Could we just get continuation of the monthly uptrend? Probably, we'll see. In terms of Visa, right? 6 months of consolidation at these lows. Could we possibly get some follow through and catch up to sector peers such as MasterCard, which is at the all-time highs, such as American Express, which is also close to the all-time highs? Visa lagging, but still having phenomenal numbers? Probably, right? So just keep an eye on those two names, especially the lagging ones. Into healthcare. Healthcare still being a little bit soft on the day today, but the bulls, nice engulfing move. Downtrend into beautiful upswing. We are looking still for a higher low, maybe not on this time frame, because if you've cracked the lows of Monday, it would be technically a daily downtrend, but a daily downtrend into what? Into very healthy weekly consolidation, right? Beautiful engulfing move, looking for the higher low, using all of the top of these guys and your big weekly EMAs as some current support, and then looking for the possible expansion. I'm still a bull in terms of healthcare, but it's a very slow trade. It's a monthly reversal trade right here. It takes some time to build into it, but we know if we accumulate around the 50 EMAs, not too bad of a trade. So whether you are playing individual companies or the ETFs, historically, healthcare is one of the more undervalued sectors right now in terms of past performance and past valuations. On to semiconductors. Semiconductors up 0.31 on the day, but down 1.12 in the after hours because the NVIDIA effect is very real. If you take a look at the extended hours right here, other than CrowdStrike and NVIDIA themselves, you'll see a bunch of either data center names or semiconductor names, right? Look, Applied Digital, ANET, right? ALAB, NBIS, SMCI, TSM, AMD, right? So obviously the semiconductor industry is down a little bit right now. Line in the sand is still set at 281.20. If you crack this on SMH, you are heading for the daily downtrend. You are heading for casual weekly consolidation. The line in the sand on the weekly is down here, 280. Crack 280. Sadly, you do lose the weekly uptrend and you go into a bit of monthly consolidation. I do still think that would be a very healthy move for the index, and I would be a net buyer in the event that that happens. The SOXX, same concept, line in the sand is down there. If you lose that, you're going into beautiful support. Just focus on the monthly timeframes here, guys. Who's in control, right? This was a monthly downtrend, nice engulfing move, looking for the good old breakout of this area, the good old breakout, retest, and possibly run. Fantastic opportunity to pick up some of your favorite names, AMD, NVIDIA, Micron, ASML, whatever you guys are looking at that's coming down into support areas after record rallies. Could be maybe a very nice opportunity to pick them up now into seasonality, into a bit of uncertainty right here, into some post-NVIDIA weakness, and carry those into Q4 and 2026 as your next leg of the rally higher. Moving into IWM Russell right now, the Russell up about 0.71 on the day, flat in the after hours, but very strong push, guys. Still a very nice daily uptrend. The bulls are just starting to run away with it. The Russell looking good, responding well to that policy pivot from the Fed just a few short days ago. Weekly uptrend is very nice right now, and you got the breakout of a very key level, 2021 highs. They've only done this a couple times prior. Every time it's resulted in, sadly, a big rejection. This time, if they do backtest it, it might provide a next trade opportunity. And as I said, the best way to play this one is with a long duration thesis. You might think that you're late if you have an anchoring bias, which ties you into back here. You might be ushering the following words, right? I can't buy it here. It was all the way down there in April. Well, yeah, but if we're looking at the next 1, 2, 3 years for the growth rally expansion, the risk on expansion, the small cap expansion that hasn't happened for the past 4 years, well, you can carry yourself into much higher levels, of course, on the Russell. So I wouldn't think it's too late. If anything, the Fed kind of just pivoted for you, right? So maybe this trade is just getting started if you have a multi-year thesis. Maybe not if you're in weekly call options. If you have a multi-year thesis, though, not the craziest thing to think about in the future. The VIX today was up about 1.5%, still doing a whole lot of nothing. So I've been talking about this one every day for the last few weeks. We're going to skip over it because you guys know the biggest volatility catalysts are tomorrow and Friday, GDP and your inflation index. If that moves higher, it means the markets are moving lower. And when the VIX is high, it is time to buy and or sell some put options under the market, right? Moving on to the yields. Yields still doing a whole lot of nothing. I've commented on this many times. You're going to need to see a break 4.2 on the 10. Give me a break of 4.2 on the 10. We could talk about weekly downtrends. We could talk about the monthly rollover on this chart. 20-year yields, you're going to have to notice a breakdown below 4.75. It's not even close to being there just yet. You need to see that for the breakdown on the weekly and also the breakdown on the monthly time frame as well, which means the bonds are still in a nice accumulation period, but still no defined rally. In my opinion, you will have to be a bit more patient leading into the September 17th meeting from the Federal Reserve. It'll only respond to the actual rate cuts, maybe not so much the idea of rate cuts in the future, right? Moving on to gold right now. So gold is currently challenging the resistance area 34.20 down to about 33.66. Challenging. This is 1, 2, 3, 4, 5, 6, 7 times they've challenged this area. Maybe 8th time is a charm. The weekly time frame provides a bit more bias for us to go with, right? It is still a very nice bull flag, tightening range right here. You might just be looking for the expansion here of the gold trade. If you want the final confirmation, you will have to see them close a candle above here because they never did, right? Need to see a break above, a retest, and then we might be able to have an entry because the last thing you want to do is buy here, get rejected, and come right back down to the lows again. So maybe the smartest thing to do is just wait for that confirmation trade for the long. In the event you get rejected, maybe we can reevaluate some longs down there. Unless they crack it, then you get the breakout retest to the downside, which should open up the door for a very, very nice short play, overbought conditions on the monthly, and just backtest the 12 EMA. So I'll be patient for one or the other, but as of right now, we are still trapped in a range, although with a bullish leaning bias. It's tough, right? Moving on to the Bitcoin and Ethereum trade. So Bitcoin still a bit weak on the day. Daily downtrend is still very clear in my humble opinion. In the event that we must move higher, you can see here the line in the sand was 112,500, and that's the area that's been causing a little bit of problems recently. If you unwind this a little bit more, you come into this very attractive area, which is obviously 108 down to about 100 flat. Previous all-time highs, congestion area, and now with the weekly downtrend, you are just looking for this area to once again act as support, and that would just be monthly consolidation, very healthy monthly consolidation. This is my accumulation zone for Bitcoin, also an area in which I've been selling some put options. So I'll be buying my thing that I'm buying right now. As I've said many times on the channel, I'm buying MSTR during this consolidation phase. Just shares, nothing fancy, no options, but just shares for the next leg of the Bitcoin rally, whenever that might come. If it comes in, there's Michael Saylor on the MSTR, on the MSTR chart. For the next leg of upside on Bitcoin, essentially, sorry. It's just, I have to put that there because it's just not that serious, guys, right? Moving into monthly consolidation, right? If you guys are in crypto, you guys got better get used to the volatility, right? You're looking eventually for the monthly higher lows for the expansion. And this leg of expansion is why I'm buying MSTR shares, not necessarily to play a swing trade from here all the way up to there. No. I'm going for the big trade. Moving on to Ethereum right now. Ethereum also weak on the day, down about 1.4%. I mean, it's a battle here between the bulls and the bears. We'll see who remains or who prevails victoriously, essentially, right? They're looking for the uptrend continuation, but if you flush the line in the sand level set a few short days ago, that'll be a daily downtrend. It would just be very healthy. Weekly consolidation, as you can see, it's been a challenge here. The bulls and the bears battling it out. Might just be looking to the downside for a retest of 4,000 down to 3,700. So whether you want to play Ethereum directly on chain, whether you want to play ETHE, which would be a backtest of 34.33, whether you want to play ETHA, that would be a backtest of 29. I mean, just go with the similar levels that you can find on Ethereum. Whether you guys want to go with Tom Lee's fund, BMNR, it's all up to you. I am playing a bit of BMNR myself, selling puts under the market. I really like this $40 to $30 range. Would not mind accumulating some shares, selling some puts to get those shares as well, and then just riding them for the longer term expansion of the Ethereum narrative as well. That's pretty much it for your overall market rundown. Hopefully you enjoyed. Now let's jump into the big tech name list, shall we? So moving into Apple, Apple was up 0.51% on the day, and surprisingly, another 0.16 in the after hours. The bulls seem as though they want to go for leg number 2. Line in the sand remains set right now at about this level right here, 224.16. If you flush that, daily downtrend continues and you are going into more weekly consolidation. But this looks good, guys. Bit of a bull flag, right? Big chop zone area, support and resistance at the same time. Support here again, and then resistance for a better part of 4 or 5 months. So you would expect the bulls do want to hold on to this region, which is why any dips on Apple, I do believe, are for buying, looking for the possible follow through, possibly into the iPhone release date, which is early September, and many other cool products that Apple will be releasing. Looking forward to that, and looking forward to see if Apple can generate a bit more revenue growth than they have in the past few years. But this one is definitely one of my favorite catch-up trades among the big tech names, because as you guys well know by now, company is still down 8% year to date, a little bit uncharacteristic for Apple, but they have had their problems this year, many of which they're currently getting over. Moving on to AMD right now, AMD up 0.31 on the day, but down 1.34 in the after hours. AMD is going to be a bit of a battle tomorrow, right? Line in the sand level remains at 158.57. If you lose this level, you would lose a couple things. Not only would you lose the daily uptrend, which we have not lost in a couple weeks right now. If you lose this daily uptrend, you'd also lose the support area, which is 157. It's a decent area, guys. It's all of these guys right there. If you drop that one, you're going for more weekly consolidation, possibly to the lower level down here, 150 or lower. I'd be a big fan of buying AMD in 2 locations. Some here, if we're going for shares, and also some down there. Why? Well, what Jensen said is pretty clear for the direction of this entire industry. There's only 2 players that are offering GPU solutions right now, guys. And quite simply, that's NVIDIA and AMD. I'm not saying AMD is going to rival or rather take away large chunks of NVIDIA's market share. No, but there's enough of a large pie for AMD to get a lot of it, especially trading at a $271 billion market cap right now. The long-term thesis is very clear for AMD, at least over the next 2-3 years. EPS will be doubling. Revenue pipeline will also be doubling, which is very strong. So, you know, NVIDIA is on a current path of revenue that's going like this, right? Revenue's still moving higher, but it's slowing down. AMD's is accelerating. And that's why AMD is my favorite of the 2 in terms of quick, fast appreciation. My favorite company overall of the 2 is obviously NVIDIA. But in terms of who's going to have the fastest share appreciation, the fastest horse in the race, in my opinion, it would be AMD. So I would be a fan of buying down here as well. At 170, the valuation is still relatively cheap as well, whether you take a PEG ratio or a forward price to sales ratio as well. On to Amazon right now. Amazon up 0.18, down 0.26 in the after hours. Amazon is still just defending this area, guys. 227 to 218. Line in the sand is down here at 220. If you crack that, daily downtrend, and you go into a bit more weekly consolidation, which would be fine. It would open up the door for me to buy a bit more shares under 220 and start selling puts as well, close to between 220 and 215. I'd be a big fan of doing that. Right now, in terms of the valuation of Amazon, it is still quite healthy. It's not cheap, but it's also not very expensive. And Amazon, man, Amazon's earnings were insane. I know a lot of people didn't really respond well to their earnings. A lot of people got shaken out. Amazon is still one of my favorite companies, guys, into the next 2, 3, 4, 5 years. They just have too many lines of businesses right now that are firing on all cylinders. The e-commerce business, the advertising business, Amazon Prime Video, the robotics division, pharmaceutical business, which is ramping, the grocery delivery business, Project Kuiper. Like, the list is just infinite for Amazon right now, and everything's doing really well. Look at this revenue ramp, man. It's hard to believe that by 2029, Amazon will be the first company generating $1 trillion in annual revenue. That's just insane. And I'm going to be there for it. It's one of my biggest positions in my portfolio. On to Google right now. Google up about 0.13, down about 0.12 in the after hours. The line in the sand stays put 197.5. That is the level that the bulls are seeking to protect, right? No closes below, so I'll give it to them. They didn't lose the daily uptrend, looking for a new daily higher low, but we know that this area has been somewhat problematic for Google to break out. It's the previous all-time high area of resistance. So it's a bit normal, right? In the event that you get rejected and overall the market is a bit weak into the next 2 days because of the NVIDIA earnings, sentiment reaction from the markets, even though I just said it was fantastic, or maybe from GDP or from inflation or from everything. If you come down, the clearest time frame for Google right now is definitely the weekly. The weekly is a bit extended right now, I will admit, but any pullbacks looking for a higher low, keep in mind Department of Justice headline is going to come out maybe in the next few days, next week or so. The ruling. Will Google have to divest some of its business lines, or will it have to divulge some of its confidential information as to how it acquires its data to competitors to make their lives easier? I don't know. We will see, right? But the market's going to move this one in a big way. One thing's for sure, if I can find, again, Google 194 down to 185, this little pocket, I'll be a big fan of selling some put options. Reload for the longs come there as well, as the valuation down there is very good. Moving on to Meta right now. So Meta was down about 0.9%. Meta weakness is continuing at this point in time. We know they had the daily uptrend. They lost it. Now the bulls are trying to get it back. The line in the sand remains the lows of last Wednesday and Thursday. If they unwind that, daily downtrend is still underway, and you'd be looking for the gap fill from the earnings session to be completed at that point. The cleanest time frame on Meta, in my humble opinion, remains the weekly. Nice weekly uptrend, looking for a weekly higher low. If they give back all the earnings, no problem at all. We got a very nice area of support back here, which is 705 down to 680. If we come back there, I'll be adding a couple more shares to my long-term portfolios. It would just be very healthy monthly consolidation. Look at this, guys. Very clear who's in control of these charts. As a result, I will be a buyer on any short-term weakness on Meta. The earnings were fantastic. Just take a screenshot right there if you want to see some of the highlights of the earnings. At 760 right now, it's not crazy expensive, but if we move down into the low 700s, it becomes a little bit more manageable. The PEG becomes a bit closer to 2, and the forward price to earnings becomes a bit closer to 26, 27. But even right now, it's not that bad. Moving on to Microsoft right now. Microsoft, 0.94% to the upside. Not too bad of a day, right? These are the legs of the daily downtrend. The leg right now got a bit smaller. This last leg right here, the bulls are trying to go for the possible engulfing move. If they can do it, maybe it's going to look like Netflix, right? Weeks of downside into finally the bulls showing you, no, we want to stop it here around 500 psychological, go for the daily uptrend reversal, and then maybe go for the weekly uptrend continuation, reacting nicely from the 12 EMA, which was, because there was a lack of support right here, I was saying the only logical place that they could stop this would probably be the weekly 12 EMA. They literally stopped it right there. We will see if it's going to be enough or if they just roll this one over. But as of right now, the bulls are not looking too bad. No swing trades for me on Microsoft right now, but also no net long-term additions because Microsoft at 500 is trading at the top end of its valuation. So keep in mind, they had fantastic earnings. I was accumulating shares down here, and many points, in between last year. I'm kind of full right now on Microsoft. It's not the most terrible name for a nibble, but still, I think there are names that represent better compound annual growth rate returns right now. If we were looking to start something right here on Microsoft, I'd maybe start a bit of a position, then maybe just seek to DCA until my position is fully built out. If we move down a bit lower, on to Netflix right now. Netflix down about 0.21%. The bulls are still playing defense in this area, 12.15 down to about 11.85. This is the whole area that the bulls are looking to defend. Resistance, support. So keep an eye out for that, guys. If they flush this location, you are looking for the daily downtrend continuation, and you're looking for the weekly downtrend being set by the bears, right? The next big area of support is 11.50 down to about 11.12. So if you ask me for Netflix shares right now, I'm not necessarily adding any Netflix shares for any short-term purposes, but if I had a 5-year time horizon, which most people should have for a long-term investment, the company can probably still 2x from here. Management's guidance is a $1 trillion market cap by 2030. Their earnings were fantastic. It's just that the valuation right now is a little bit expensive, right, in relation to other companies out there, but not the worst. So it has been consolidating now for a while, even though it popped above, right? We're currently still at the same prices we had back in May. Not a bad ad, but also not my favorite, but I'm not selling any shares. This one is kind of just a hold for me. Moving on to NVIDIA, we just covered NVIDIA, but as I was saying, the line in the sand remains down here at about 169. They're currently at 176 in the after hours. So we'll see. Maybe they can protect these lows. It's been support for them for a while, since the early stages of the month of July. If you flush this, though, come into support, daily downtrend, we'll see if the bulls can stop. And in the event that you unwind this, you would still be looking for just weekly consolidation. So it wouldn't be so awkward. Weekly consolidation at the same time on this one would be a bit of monthly consolidation too. I'm sure that a lot of you would be very much willing to buy the dip on NVIDIA, and I would too, right? So first line of defense is obviously this whole 170 to 165 location. The bigger line of defense, of course, is down here at your prior all-time highs. It would be a nice pullback in the event that you get it, whether it's from NVIDIA sentiment or from macro catalysts before the Federal Reserve cuts interest rates, anything of that nature. If NVIDIA drops between this 165 and 150 pocket, nice accumulation zone for possible shares or possible longer duration swing trades type of things, right? But as of now, I'll kind of let it play out for earnings a little bit. Not going to lie, tomorrow morning, I will maybe be looking for some short puts, maybe in the low 160s if I can find them for next week. I would do some here and then some down there if we do fall a bit lower. So taking the staggered approach. Moving on to Tesla right now. Tesla down about 0.6%, rejecting from their resistance range. 360 down to 340. We will see. The bulls had a very nice leg of expansion here. If they get a little bit tired, you're looking for a daily higher low, anything above 315, looking for that higher low. Maybe come back into these guys and the EMAs to kind of set that higher low and go for a bit more. Not looking terrible though. On the weekly, we are still looking for the infamous weekly trend continuation, the expansion play. If you guys are in from the lows, well, then the stop loss can be down below there, because if you lose that, then obviously you're coming right back down to support, which is like 300. But until that time, if you have some longer duration swing trades, I see no major red flags for Tesla here. Tesla bulls are just looking to go for the monthly expansion after being stuck here for a better part of the last, what? Like, I mean, 6-9 months in this very wide, awkward range. Now they're looking for the breakout. So not too bad if you've acquired some positions towards the lows. I don't really see any red flags in terms of selling just yet. Moving on to Palantir right now. Palantir down 2.6% during the day and another 1.12 in the after hours. Your level to watch out for on Palantir, guys, of course, is going to be your lows down here about 142, right? That's the flush zone. The bulls are trying for the daily uptrend. Couldn't get it done. Couldn't break 163.50. So the bears are looking to convert this into a bear flag, right? And just move towards lower lows. In the event that that does happen, you are looking for just further weekly consolidation. We still have a bit of space right here. I think above 128.50, looking for a higher low for further trend continuation. You can see the bulls are protecting this area, yes, but also that is also the weekly 12 EMA. So please keep that in mind. Any further weekly slides or conversion from the bears into a downtrend, I know that people won't want to hear this, but this monthly candle doesn't give me the most bullish aura, right? It kind of looks a little bit bearish. If you do get that bearish slide into September, you might just be looking for a bit more consolidation on the monthly, which is very healthy. And I might be looking to shop for some Palantir short puts or maybe swing trade opportunities down here, 130 to 120. I'm not saying it's going there. I'm just saying if it does, it would look very logical. It would be lining up with the 12 EMA several times before. Palantir has done this, where it has nice rallies, pulls back into the 12, all just healthy price action in my opinion. Moving on to SOFI right now. SOFI down about 2.58%. Also very healthy price action. You got the breakout of a huge level. Bulls get a little bit tired. FOMO traps everybody. And then we get a little bit of a pullback right there. But it's a very clear trend right now for the bulls. 24.30 down to about 22.30. I mean, you can call it 22.50, 22.30, whatever. It's this whole region right there. Clear breakout on the weekly time frame. Just looking for a little bit of a fallback trade into here. I wouldn't mind selling some put options into this location, but go with a staggered approach, right? Some here, then a little bit more. You're just looking to accumulate some SOFI positions because, as I've said, SOFI, if you have a longer duration thesis for the company and you're looking to acquire some shares and hold them into Q4 of this year and into 2026 and into 2027, you're going to have to play these weekly pullbacks and try to accumulate those positions rather than constantly FOMOing at the top end of some moves right here when your short-term timeframes get super overbought, right? Like when your hourlies are clipping into 80 RSI levels, maybe you should wait for a pullback. And as a result, I'm playing this pullback in a support. SOFI right now at $25 is not the worst in terms of valuation. You're trading at a 9 forward price to sales, which is not bad. Robinhood is above 20. Just for some context, right? And the forward peg is a 1.61, which is still quite manageable as SOFI expands its ecosystem. Moving on to Uber right now. Uber down about 1.25%. Now I'll leave these little circled areas on the, I mean, no, never mind. I'll take them off and I'll explain why they're there. So Uber doing a good job of expanding, but you can see this daily time frame is very, very, very choppy, extremely choppy. The clearest time frame, in my opinion, guys, remains the weekly. Clear bull control of this weekly uptrend right now. You'd just be looking for a retest down here of the support range, this level right there. Talking about 93 down to about $90.50. We will see if we can get that for the possible further breakout. No swing trades on Uber for me just yet. In the event we pull back hard into this region, you might find me trying to sell puts into the maybe the high to mid 80s, which is your weekly higher lows. I think the bulls have a good chance of protecting this area. As a result, that's how I'm going to play it. At $90, would it be a good buy? Not too bad, honestly. Forward valuations are not too bad by any metric whatsoever. Free cash flow yield, very decent, and the forward PEG ratio, still quite cheap. Lastly, TSM. TSM up 0.24 during regular hours, but down 1.63 in the afters. Your line in the sand remains still 225 for the continuation of the daily uptrend, or the daily downtrend. However, what the bulls did is they put in a very nice retracement size bounce right there. It was a daily downtrend. That's a 78% retracement. They now have a lot of space to possibly reset the higher lows, go for the trend expansion. I know it's very messy. A lot of gaps, a lot of awkward price action right there. The cleanest time frame, in my opinion, is the weekly. This is a weekly bull flag, in my opinion. Any further weakness is a great opportunity to be accumulating some longs, whether it's shares or whether it's leap call options. If you truly believe in TSM that way, the valuation around 230 is very cheap. As a result, this is just an accumulation period, the bottom end of which could come down to 220, possibly down to 210. That would just be very healthy monthly consolidation. A lot of these charts, they're consolidating on the weekly, and if you get some final flushes, people get nervous, but not my viewers. You guys will know that these are for longer term buying opportunities for the expansion of the business cycle of these companies that have literally said that everything is sold out through 2025 and 2026. That's the guidance from TSM, and the valuation is still very manageable, low 20s forward multiples for price to earnings, and a very cheap PEG ratio as well. That is everything for our overall market rundown. Hopefully you guys enjoyed. Now, let's dive into our biggest gainers and losers of the day, shall we? Okay, so let's talk about some meme stocks and everything in between. So Open Door down 14%. Once again, everybody getting trapped at the wrong location, guys. You want to be playing the pullbacks. I've been talking about this very often. Open Door is a company that I think the best strategy that can serve you is selling. If you want to accumulate some shares, 100 shares at a time, the best thing you can do is sell puts under the market, right? If you have a thesis that Open Door with the theme of rate cuts can possibly pull a longer duration expansion cycle, well, then you would be accumulating some shares here, right? Only the amount of shares, the money that you'd be willing to lose, because it's possible the thesis does not play out. It has the tailwinds of the rate cuts. It has the tailwinds of a new management team and a new, not a new business model, but a refined business model where they don't just throw money into the fireplace by buying houses at the wrong prices, spending too much on renovations and then selling them at a loss. No. They've reviewed their ways and are rearranging their business model. So Open Door for me would be in the 3s. If we can get there, you might not think we can get there, which is why I'm a big fan of selling puts. If you get there, you get filled and you get to collect some premium in the process here. It's tough to gauge which way this one is going to move in the short term, guys. It goes up and down 1,000,000% every single day. So the best thing you can do is focus on not getting trapped in the FOMO cycles, waiting patiently on the dip cycles, and then positioning possibly for the next leg higher. Taking a look at BMNR right here, Tom Lee's fund. Well, you can see there is a highlight that should be here, but it's not, unfortunately. Anyways, they have about $8 billion in Ethereum at its current market value. The market cap of the company is about $8 billion. This is a rare occasion where there's no premium for this stock, which is why I kind of like this one. $40 down to $35. If you ask me how I'm trying to buy it down there, you guys guessed it. I'm selling put options down here, and the shares that I get, some I will wheel away with covered calls. Some, though, I might just keep. For now, the daily bears are in control, and we're just looking for a comeback into maybe the low 40s into the $30 range, which I do believe is an accumulation period if you are bullish on what Tom Lee is trying to do. Moving on to Robinhood right here, 5.4% to the downside. Line in the sand is Wednesday's lows. Daily bears have been in control of this one, looking for a bit more. We have a last layer of support here as well. $98. We will see if they break that. If they break that, though, guys, it's not going to be looking pretty, right? Huge leg expansion, no support set this entire way higher, other than these guys right here. If you start breaking down, already this retracement size is something to be a little bit concerned about, right? It's a 618. It was 782. It's still a 618 retracement size. It opens up the door for one of two things, either a tightening range, which is going to throw a lot of people for a curveball, or just the weekly downswing flush into monthly consolidation. This one is very expensive right now. In the 100s, it's a 81 forward price to earnings. Even with a very nice EPS growth rate, you're trading at a 5.6 peg at a 25 price to sales. NVIDIA is cheaper than Robinhood right now. All things considered, NVIDIA is cheaper. And NVIDIA, you can argue, is doing much better and bigger things than Robinhood right now. But then again, they're two completely different companies. I'm not here to tell you which one you should prefer. I'm just here to tell you what the price action is saying. So I'm not going to be bidding Robinhood up here. I will let the price action kind of flow as it's being said, right? And if we do get a pullback here, maybe into very healthy monthly consolidation, as Robinhood has done many times, where it goes on very nice rallies, pulls back to the 12, very nice rallies. Maybe we don't pull back all the way to the 12, right? But if we get some nice volatility, maybe I'll just play some short puts with some distance, because I really can't get behind this valuation. Buying a tremendous amount of shares right here is super greedy in my opinion. But if you're a holder from, 30, 40, 50 bucks, I also don't necessarily see a reason to sell everything. I've been a firm believer of clipping out of profits has been the best thing to do. But if you have long-term vision on Robinhood, you could probably keep some. On to Rocket Mortgage. Rocket Mortgage coming back down into support, 1775 down to about 17. I might be looking to play this retracement. Now, the daily is kind of messy right here, right? Big candles up, big candles down. The clearest time frame is the weekly. Gorgeous weekly leg of expansion with those rate cuts. First stop is right here into the bottom end of 17. If I was looking to play this one on a pullback to accumulate, short puts at 17 and then save some buying power for the good old 16, 15 level in the event that they get a very heavy retracement, right? So I'll be playing some here. I'll be playing some here. You guys might remember I had some call options, some of which we sold here, some of which we sold at the top. And now maybe to reposition for some 2027 dated ones, I'll be looking for this pullback overall. Stock is still looking very good for some expansion into the next 1, 2, 3 years, as it has a thematic tailwind, housing market, and the rate cuts, of course. We can talk about ASTS and Rocket Lab at the exact same time if you guys really want to. ASTS, a little bit of weakness here. Support stays put, 45 down to 42. If you ask me where I would buy this one, guys, you're going to have to give me more volatility, and you're going to have to open up the door for me to sell some puts down here into the 35 region, just because these companies, although they're fun, they don't have any revenue, right? Well, Rocket Lab has a bit, but ASTS's revenue is coming online 2027, 2028. So all of this so far is hype. As a result, if they sell down the hype, I might be a fan of buying down here where it makes a bit more sense. And Rocket Lab doesn't have that same problem. I mean, they do generate some revenue. Rocket Lab, obviously known as the mini Starlink, is what many people call this one too, right? So Rocket Lab, I mean, you can see, right? It's blown past a lot of the analyst price targets right here. I know analysts are late to the game sometimes. You can make that argument, sure. EPS will be flipping come 2027, and revenue, the best years of revenue growth, come a bit later, right? This company, though, right now is trading at $22 billion in market cap. That is, I mean, I'm not going to give you 2025 because you're not going to like it. It's like a 40 price to sales. Very expensive. It's like Palantir expensive, or a little bit, a little less than Palantir, but still, you know what I mean? Come 2027, they're still trading for a 20 price to sales multiple. As a result, you're going to need to give me a discount. But if you wanted to play this one on a swing trade, daily downtrend, clear as day, engulfing move, looking for the backtest of where all these guys right there, if you come down into it, 44, 43, you can try and set a stop loss here and try to go for the expansion into further psychological targets, such as something like a 50, 55. You come down here, 43, stop loss below 38, $5 stop loss, $7 to $10 take profit target all the way up there. Moving on to Reddit. Reddit is also a company that is, it had a tremendous rally after earnings. Just going to say it for how it is, right? But, sometimes it has to consolidate a little bit, and we are consolidating right now. Sadly, we can't really say that this is support because there's really nothing there, right? They didn't really set anything there. This is not really big support either. The larger ones come down below here, 180 to 150, 160 type of thing. As a result, if Reddit consolidates a little bit more, comes down into there, you might find me on some big red days, sell some puts down here. We did the valuation after earnings at 188, and it was not the worst, but also not the best, right? It was a 2-peg, 17 forward price to sales, which is very expensive, even for a fast-growing tech company such as Reddit, advertising company, tech company, whatever you want to call it. I'd be a fan of selling some put options down here, but I will be a bit patient on this trade. It's ran a lot, so I can't really trap myself trying to position up here, even though sometimes that works. It's just not the best risk to reward, not how I trade anyways. I think that's pretty much it of the companies that people wanted to talk about. We could talk about a few more, like HIMS. HIMS, you guys know me. 37 to 35 is where I would be a fan of selling some put options on this one. I mean, this one, big downswing. People could argue that, I mean, yeah, it's a little daily uptrend, but daily uptrend into what? This kind of just looks like a bear flag, right? So in the event that you unwind and go further down, I'd be a big fan of playing HIMS down here. Overall, the valuation at 45 is not terrible, but it does get much better down here in the mid 30s. So I'll be playing some put options down here. No swing trade longs for me on HIMS right now, as the bulls have lost a little bit too much ground for my liking for any swing trades. I'll need to see, you know, more bullish action. Give me like, you know, give me a nice upswing, give me a nice weekly push higher than support, get the support back, and then maybe I can play it for something like that. But playing it down here, not the best. And I would be a fan of accumulating more shares there, because you guys know I bought shares here, I sold them there. My position is now free. If I'm looking to buy them back, well, I'll buy them back down there if they do offer that opportunity. And also keep an eye, guys. I know there's many other names on this list, but just keep an eye on some of the semiconductor names in tomorrow, some of the weakness, right? Names like Micron, perhaps, coming back down 110 to 100, this infamous zone of support that we have right here, 110 down to 100, very, very strong. ASML, if ASML makes its way somehow back into the low 700s, like 730 or below, even here is a great opportunity for some long-term shares, but down there is really the best opportunity as well. So keep an eye on some of those things. You'll find a lot of things down from the extended hours from NVIDIA down today, some thematic plays, right? If you guys want to play NBIS for a pullback into the 59 down to 55 location for some short puts, accumulate some positions, no problem. If you want to play CRWD as well, you know, CRWD, strong, man. I mean, just when Jensen said, they even commented on CRWD, by the way, as being to like the go-to solution for just the fact that, you know, there's so many, not only large cap companies, but there's so many small companies that have been created recently that need this compute power, and they don't have access to NVIDIA's GPU pipelines, because all those cards are reserved for a lot of the large cap companies. So these companies only have a few places to go to. They can only go to CRWD, they can only go to NBIS, they can go to companies like IRN, which are all renting out compute capacity, right? So a lot of these players on some pullbacks, not a bad opportunity to be DCAing into some of these positions, right? Just use some of the very logical support areas that we've just come out of, right? Like IRN, I mean, there's a few of them, right? There's one that's a little bit higher. That's just these guys right there, like top end of there. It's not the strongest one. This one is stronger, 15 down to 13. But, you know, if you're looking to accumulate and sell some put options below, if these are your favorite names, I'm not opposed to doing it because it's like a multi-year thesis, but I think you guys all know that by now. So just keep an eye on some of these thematic plays, some of the pullback names on your favorite stocks, and just play the levels for what they are, right? Whether it's VRT, whether it's names like ANET or things of that nature, right? If you pull back into somewhat large support areas after these record moves, not a bad opportunity to be reloading the entire semiconductor trade. And that's just how I kind of view the data center trade, because it still is kind of early on. I know it doesn't look that way in terms of the charts, but you know, the guidance from AMD, from CoreWeave, and also from Big Tech, I mean, the guidance is very clear, right? It's multi-year guidance, not only into next year. Talking about ELF, we're going to do a few more ones, and then I'm out of here, guys. ELF Beauty, not too bad. The clearest time frame for me is the monthly, okay? Monthly downtrend, big 78, 80% retracement. Set the higher lows. Look at these monthly wicks, right? Set the higher lows into this location down here. Might just be looking for the expansion. Not looking too bad. Monthly MACD, guys, this is like a year worth of negative monthly MACD, finally starting to cross over with a bullish leaning pattern. Not too bad for some expansion. We were talking about it, accumulating some ELF shares in these lower levels. It's not a bad proposition right now. The valuation right now, I mean, we did it at 100. Right now it's about 120. So you'll have to add, you know, a good 15, 20% to these valuations, but still, it's still cheap. Price to sales is still cheap. ELF is still only a $7 billion company, guys. I think there's a decent amount more upside to ELF Beauty to be had. So keep that in mind. Obviously, CoreWeave, we spoke about, decent. You guys know my thesis on CoreWeave, guys. It's very clear, right? It's a multi-year thesis, right? I understand they have a lot of debt, but rate cuts are going to help with that as well. In terms of forward multiples, price to sales, super cheap. A lot of their CapEx, right? A lot of their CapEx, okay? And Jensen talked about this as well. They have a lot of Blackwell Ultra units coming in Q4, a lot. And a lot of these companies are going to need that compute power. Okay, so we will focus on CoreWeave a bit more, because I do think that here down to 80, very good area to accumulate some CoreWeave positions if you share a similar thesis. If you don't, I'm not going to be here to convince you. Do your own research, right? But if you do have a similar thesis, I mean, the numbers kind of speak for themselves as in terms of what they're going to try and do. In terms of the other cybersecurity names, we'll see how they respond. Sentinel-1 has earnings tomorrow. Datadog moving well as well. So we'll see how they react tomorrow with the CrowdStrike earnings. Right now, they're not really moving. But my favorite ones, Palo Alto Networks, CrowdStrike, SentinelOne, special shout out to them. They're a bit of a cheaper play as well. Plays like Louis Vuitton, we talked about. Louis Vuitton for me is an ad just for the recovery of the average consumer, essentially. This one's just been down for the past 2 years. High quality company. It's not only Louis Vuitton. It is 75 luxury brands, right? And the valuation down here is pretty attractive. New Holdings, been talking about this one a lot. It's finally starting to break out. A lot of my Discord members were able to accumulate some call option positions, some shares in this one as well. It's not too late. We did the valuation after their earnings. Valuation for 2027 and 2028, your base and bull case scenarios are very clear in terms of the upside. Mid to high 20s for 2027 and low 30s possibly for 2028. It is a multi-year play. It's the SOFI of Latin America. If you're looking for pure price action, look for the back test of this very clear resistance, which is now going to be support range. Talking about 14 down to 13 is a heck of accumulation area. But even right now, guys, it's not bad as long as you have a longer term time horizon. And we're going to stop it there. We'll cover more plays tomorrow. Of course, tomorrow I'll be bringing you guys earnings from the likes of SentinelOne, Affirm, and then maybe one of these, Marvell, Dell, or IREN. We'll see which one we do. Maybe Ulta Beauty. We'll see which one surprises me or speaks to me the most. And then on Friday, you have the BABA. If we can't get to all of them tomorrow, maybe I'll do another one with BABA on Friday. But that's everything I had for you guys today. So hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new. We do these every Monday to Friday after the close. And last but not least, if you have any questions, please feel free to ask them down below. I'm always a big fan of answering your guys' questions. I'll get to them as soon as possible. And last but not least, if you guys were interested in joining a community of like-minded traders and investors such as yourselves, where we trade the markets live every day, you guys get to ask me questions personally, and you'll make a lot of friends along the way. Our members have been absolutely crushing it this year. This success channel is filled with people who are just doing very good progress with their long-term investments, with their trades, learning a lot as well, and applying this knowledge moving forward to kind of just, ensure that their future selves are very happy with their performance now and in the short and medium term and long term as well. You get access to all of my trades in real time, whether it's the wheel trades, the directional trades like call debit spreads, call options, all that good stuff, swing trades with shares. Here's most of all our trades here in the last few months. The green little check marks are wins. The red little circles are losses. These are weekly recaps. So, there you go. You get access to all those trades in real time. You get access to our private morning live streams Monday to Friday. I trade live and also answer your questions for about 2-3 hours every single day. And you can ask me questions on your stocks, your options, and your long-term portfolios, and I will help you guys out as best as I can. You can also watch them after they're recorded. You can ask me all your questions in our chat rooms throughout the day. I'm very fast to answer. And you also get access to our educational section as well, where I provide educational videos on how I do technical analysis, fundamental analysis, how to grow accounts, small, medium, large, what trading strategies should be in those accounts, all educational videos on leaps, debit spreads, credit spreads, everything, guys, that I know is in that educational section for our members. You can also copy all my charts too. So in the event that you enjoy my support resistance areas and you want to also have the fundamental rundowns when I cover them on earnings for like 100 plus companies, almost 200 companies, I have this type of layout on support resistance and all that. You can copy all my watch lists and you can copy all my charts. It takes 10-15 seconds. That is it. If any of that interests you, you can click the link down below in the video description and you will make our way into our community and be part of the family. If that interests you, I'll be very happy to see you in there. And if not, I'll see you right back here on the channel. That's it for me, guys. Have a great rest of your evening. I'll see you tomorrow after the close. Have a good session tomorrow. Take care and peace.